The Euro-USD pair is on the brink of a potential breakout. Let's dive into the fundamentals and technical analysis to understand the current market dynamics. The US dollar experienced a broad sell-off on Friday, triggered by yet another underwhelming NFP report. This has increased market expectations of a dovish Fed, with 3 rate cuts anticipated by the end of the year, totaling 70 basis points. However, there's a twist, an 8% probability of a 50 BPS cut in September, but only if the upcoming CPI report on Thursday is soft. In such a scenario, the greenback could weaken further ahead of the FOMC meeting. Zooming out, the US dollar continues to trade within a range, with dovish Fed bets weighing on its value. Part of this could be attributed to overstretched bearish positioning on the dollar, suggesting we might have reached the peak of dovish pricing. Interestingly, if the rate cuts stimulate stronger economic activity in the coming months, we could see those cuts priced out, providing support to the dollar. On the euro side, the recent French political drama is the only notable fundamental development. Today's French confidence vote in the afternoon is expected to result in the Prime Minister's loss, which should already be reflected in the market, but could cause some intraday volatility. In terms of monetary policy, the ECB's stance has shifted towards neutrality regarding rate cuts. Members will require significant negative data to justify further cuts. The market is pricing in only 8 bits of easing by year-end, and 19 bits by the end of 2026, indicating that the easing cycle may have already concluded. The ECB's rate decision this week is anticipated to be uneventful, with the central bank maintaining steady interest rates and offering limited forward guidance, other than stating they are well-positioned and require strong reasons to cut further. Now, let's examine the technical analysis. On the 4-hour chart, Euro-USD is poised for a potential breakout from its month-long range. If the price breaks above this level, buyers are likely to enter with defined risk below the zone, positioning for a rally towards a new cycle high. Conversely, sellers will continue to defend this resistance, aiming to target the 1.16 support. The 1-hour chart provides a clearer picture, showing an upward spike post the soft NFP report, followed by a pullback into the weekend. If we see a larger pullback from this resistance, buyers are expected to step in around the minor support at 1.1680. Sellers, on the other hand, will aim for a break below this support to increase bearish bets towards the 1.16 support. Upcoming catalysts include the US PPI report on Wednesday, the ECB rate decision and US CPI report on Thursday, and the University of Michigan Consumer Sentiment report on Friday. And here's where it gets controversial. With the market pricing in limited easing, could the Euro-USD pair be poised for a bullish move? Or will the fundamental and technical factors align to continue the downward trend? Share your thoughts and predictions in the comments.